Let's get more on the Lyft IPO now with Daniel Ryntjes in Washington. Hi, Daniel. As we know, there was a lot of anticipation ahead of Lyft's listing because I guess this was one of the first big of the so-called gig economy debuts on Wall Street. Did it live up to the hype, though?
Well, in the lead up to this flotation, the price before it has gone on to the market was lifted from a range of between 62 and 68 to between 70 and 72. And the indications are that this has been sold to investors before it's gone on the market for $72. We're just waiting for the first initial prices to appear on NASDAQ. But the indications are that demand has been very, very strong.
Interesting. Ahead of this IPO, investors valued Lyft at around $25 billion, which equates to that $72 per share listing that you mentioned. That is quite an impressive amount for a firm that really hasn't expanded beyond the US and Canada. Are there plans in the wake of this debut for Lyft to perhaps go global?
Well, not to the extent that its rival Uber has thus far. You're right, it's only in the US and Canada at the moment. But with this injection of cash, I'm sure there will be both a geographic expansion, an increase in its partnerships around the world, and also, I think crucially, the company will be looking at how it can use its platform to expand into other markets, as Uber has already done, into Uber Eats, the food delivery service, and the truck service, the Uber delivery logistics service, and other things. So I think we are looking at the very beginnings of the market for these two major delivery and ride-sharing companies. This is only the very beginning, and what essentially the market is buying here is a platform that can be used, can be utilized for the next generation of smart devices, delivery services, logistics, and the rest of it. It's unclear exactly where Lyft is going at this point, but it will have many opportunities to make revenue out of its platform.
As we know, Lyft has always played a second fiddle to its more dominant rival Uber, which has pretty much taken on the world and is winning at the moment. Uber, no doubt, is watching this listing very closely. What do we know about Uber's plans to go public?
That's likely to happen in April, and two major Wall Street banks have valued the company at an astonishing $120 billion US. So even if it were to float a small percentage, maybe 16% of that, it would rank as one of the top 5 ever IPOs in the history of the US markets. So take a deep breath. The Lyft valuation and the Lyft flotation is a sign of more to come. Uber is a much bigger company, as you say. It is positioned to expand in different markets, as I say, including Uber Eats and this transport logistics operation. And I think people are seeing that this is the major Wall Street story of the year, because at a time when people are starting to wonder whether market valuations more generally have reached their peak, there is huge confidence in this area. And despite the fact that even in Lyft's case, it is losing around $1 billion US each year as it goes forward and tries to expand its market share. So there is no profit to be made at the moment, but people clearly have a lot of confidence in the platform that is being created for the future.
It's not long ago that firms like Lyft and Uber were these nimble startups that were born out of garages in various cities out of the US. They've quickly become these behemoths, not only in the US but around the world. But I guess, as the saying goes, with great power comes responsibility. Right. Do you think there'll be pressure on these companies to perhaps, for example, improve working conditions for their workers as, I guess, they expose themselves to more scrutiny from regulators?
Absolutely. I think there is a lot of risk involved in seeing this as a pure sort of ride-sharing play, because regulators are looking at this. I think a lot of jurisdictions, a lot of cities are now looking to impose additional taxes in order to bring them in line with what the taxi companies have to pay, so that they're less competitive vis-a-vis the taxi companies. Uber and Lyft have both been saying we're just a transaction organization. We don't have anything to do with the decisions made by the riders. They are trying to push that away. But I think in an era when many political actors are looking at increasing the power of these gig economy workers, I think there is a very real risk that they will become less profitable in the near term. But I say the long-term play here is for the entire platform and what it can do for the next generation of 5G linked devices.
Okay, Daniel Ryntjes in Washington, thank you for that update.